All right, well, I'm here at home, and it's the end of the year, and I was kind of taking a look at my books. This kind of the time of year where taxes are on my mind, and this would apply to anybody that's getting paid on 1099, whether you're leased to a company or you're an independent. If you're leased to a company, you get one 1099, and if you're an independent, I get a whole bunch of 1099s, and so I just go through what I kind of do. And really, if you're paid on 1099, you're really required to pay taxes quarterly. Not everybody does it, and you don't have to, but at the end of the year, a lot of times you will have to pay a penalty for not paying your taxes quarterly. So I'm going to base on this just for round numbers. Let's say you gross $200,000. And so what I've always heard is, and this is what I do, it's pretty much about 10% of what you gross is what you're going to have to pay in on income tax. And it's about 80-20. 80-20, 75-25, something like that, federal to state. And you can print those forms right off the IRS website and your state's website. Well, at least you can in Indiana, so I'm sure you can in every state. Another thing I hear is, again, going along with our $200,000 gross, again, you're going to have $20,000 worth of tax that's owed. And people will say, I'm going to try to, I guess, kind of buy your way out of paying taxes. And, if it's something you need, like tires, brakes, something you're going to need for the next year, yeah, that's one thing. But, well, let's just say you can't, when you buy something, it doesn't, if you spend $1, it doesn't cancel $1 of tax debt. It's usually about 30 cents on the dollar. So if I was to have a $20,000 tax bill, I'd have to spend somewhere around like $66,000 to cancel out that tax bill. Now, unless it's something that you really need for $66,000, I think you're better off just pay your tax and go on. And again, like I said, tires, brakes, any kind of parts, anything you will need for that next year, and you need to soften your tax bill for the year you're in, yeah, go ahead and do it. I mean, that makes sense. Yeah, this is the worry I have about not paying quarterly taxes. And so let's say you owe that $20,000, and it's the last day of December, or getting pretty close like we are now, and you have something major happen. Let's say an engine goes, and it's $30,000 to have it fixed. Well, you're kind of counting on that $30,000 to cover your tax bill in April. And really, I mean, the end of that first quarter is when a lot of stuff comes in, because if you do owe money, you owe for, let's say let's say we're April 15th of 2025. So you owe the tax from the previous year, plus if you're going to pay your quarterlies, your first quarter payment is due on that day. So there's a lot going on. And that's how I think people could get behind it. I like paying mine quarterly because it just kind of feels like I'm on top of, you're ahead of the game almost, just paying them. And one year, though, I'll tell you, it was in 2021, I had a really good year, and I'd paid in quarterly what I had made the year before. We just kind of estimated it for the year before. And it was a really, really good year, where it was one of those deals where I really didn't have a whole lot break. I didn't have to buy many tires, and it was just a really, really good year in gross revenue. And I owed a lot more money than I thought. It actually put me in a higher tax bracket, and that's the only year this has happened. But it put me somewhere around that 15-16% tax. And I was telling you that story because it's a good thing. Maybe, the beginning of the fourth quarter, say the 1st of October. You might go talk to your tax preparer, have your profit and loss or business report printed off, and go ahead and take it into him or her, and have them look at it and say, where are we at? kind of get, you know, at least you got like you got like 7 months before that tax bill is due. And if maybe you do need to spend a little money, if you need tires, say in January, go ahead and buy them in December. That way you'll get that tax write-off. And another thing that'll make your taxes a lot easier is good record keeping. I've mentioned it many times before. What I use is it's called profit gauges. You can Google Let's Truck, and it will come up. Now this isn't for a fleet of trucks. This probably wouldn't work for you. What this is for, it's good for a one truck, a guy running his own truck, just like I am. Whether you're leased to somebody or you're an independent, just one person running their own truck. This is a really, really good. It's accounting software, as it is what it is, and yeah, I really like it. And my tax preparer likes it because at the end of the year, because it figures up all my per diem and all that, because you put how many days you were out during the year, and it breaks it down month to month. And then all I have to do at the end of the year is print out one sheet of paper and give it to him, and then I kind of print some other stuff out just where I can follow along if he's got questions or whatever. But that really, really helps. And yeah, it's better. I used to have QuickBooks, and I like this much better. So that's just my opinion about that. But it makes it a lot easier, you know, during tax time to know what's going on. So yeah, this is just a short video about taxes, and we will see you on the next video. Thanks.